So let's talk about something fascinating, a trading strategy that promised a perfect 100% win rate. Imagine a group of students who came out with a system that, get this, literally never lost a single trade. But here's the kicker. Did that perfect record actually lead to victory? Let's dive in. I mean, that's the holy grail of investing, isn't it? Finding a way to trade stocks without ever having to close a trade in the red. Well, believe it or not, one group of students decided to take on that exact challenge. All right, so let's set the scene. We're at University Science Islam, Malaysia, where finance students are battling it out in this high-stakes investment competition. Think of it like a trading simulator, but with some serious bragging rights on the line. So in a game like this, you'd think the goal is obvious, right? Make the most money possible, crush the market. But this one team, Group 6, they chose a totally different path. They weren't swinging for the fences. Nope. Instead, they built their entire strategy around a single powerful idea: patience. They decided they weren't going to chase quick profits. They were going to wait and wait for that perfect, super low-risk moment to make their move. So, how'd they do it? Well, their strategy was a mix of two main ideas. First up is something called swing trading. Basically, that just means holding on to stocks for a few days or weeks, not long-term. And they combine that with a classic technique, buy on dip, or BOD for short. The idea is so simple but so powerful. You only buy shares in really solid companies right after their price takes a temporary nosedive. And right here, this is what made their whole approach so wild. Their main goal wasn't to get rich. It was to be perfect. They wanted to close every single trade with a gain, even if it was tiny. Protecting their starting money was priority number 1, 2, and 3. Okay, so how on earth did they manage to be so patient? I mean, what was their secret weapon against that temptation to just jump into a risky trade? Well, it really all boils down to this one huge number. You're seeing that right. They kept over 88% of their entire portfolio. We're talking more than 88,000 Malaysian ringgit just sitting there in cash. This massive cash cushion was their superpower. It meant they never felt pressure to make a bad move. They could just lean back, ignore all the market chaos, and wait for that perfect buy-the-dip opportunity to fall right into their laps. Okay, so they had the patient mindset and they had the cash to back it up. But how did they know what to buy and, just as importantly, when to buy it? Well, that's where their super disciplined two-part analysis comes into play. What I love about their process is how they split it into two simple questions. First, they used fundamental analysis to figure out what should we buy. They were screening for solid, financially healthy companies that also happened to be Sharia compliant. Then, once they had their what, they switched over to technical analysis to answer the million-dollar question, okay, when do we buy and sell? And for that, they were all about the chart. And man, were they disciplined. They had this strict 3-step checklist for every single trade. Step 1, the price chart had to be trending up, no exceptions. Step 2, to double-check that trend, the price had to be trading above its moving average. It's a classic confirmation signal. And for the final check, step 3, they used an indicator called the RSI. This helped them spot if a stock was getting too hot or cold, so they wouldn't buy at the very top. And check this out. Here's a perfect example of their system at work. So they bought into this company, Aurelius Technologies, and just 10 days later, you can see on the chart right here, the price popped up nicely. But look at the RSI indicator at the bottom. See how it's creeping up towards that overbought area? That was their cue. They didn't get greedy. They sold, bam, locked in a solid 10.8% profit. Pure, cold, calculated discipline. So you take that kind of patience, that discipline, that data-driven approach, and you end up with a result that is, well, pretty mind-blowing. After all was said and done, when they looked back at all their closed trades, their win rate was, well, you're looking at it, perfect. Think about this. Over the entire 12-week competition, Group 6 made 21 trades, and every single one was a winner. Not a single loss, not one. They perfectly achieved their main goal, which was to never lose their starting capital. Mission accomplished, right? So they did it. A perfect 100% win rate. You'd think they would have absolutely demolished the competition, right? Well, this is where the story gets really interesting. That perfect record, it didn't get them the gold medal. It didn't even get them silver or bronze. In fact, it didn't even get them in the top half of the competition.
Out of 21 teams, this is where they landed.
So let's break down the final numbers because this is where it all comes together. They started with a cool 100,000 ringgit, and their total profit, after all that work, a grand total of 80 ringgit and 50 cents. So yeah, you've got this beautiful, perfect 100% win rate sitting right next to a 14th place finish out of 21. And this right here is the big takeaway. Their strategy was absolutely brilliant at one thing, managing risk, a total masterclass. But because they were so conservative, keeping all that cash on the sidelines and taking these tiny little profits, they paid a massive price in what's called opportunity cost. While they were making pennies without any risk, other teams were taking bigger chances and making much, much bigger gains. It's like they won every single battle, but they just didn't score enough points to win the overall war.
And all of this really leaves us with a fascinating question to ask ourselves about our own investment styles. What does winning actually mean to you? Is it the incredible safety of never, ever losing money like Group 6? Or is it being willing to accept some risk for the chance to get those much bigger top-ranking returns? There's really no right or wrong answer here, but knowing which one you are, well, that defines your entire strategy.